Another one of the changes from the new tax bill signed by President Trump on July 4th that you may have heard about is the ability to deduct car loan interest. So this video is just going to walk through kind of the parameters of deducting interest on a car loan, who qualifies, and how do you do it, and what kind of the steps that are going to take place for this. So there is a new deduction for qualified passenger vehicle loan interest up to $10,000. The deduction does not reduce your adjusted gross income. It doesn't reduce your AGI, but it does reduce your taxable income. It's not an itemized deduction, so it's not a question of whether or not you take the standard or the itemized deduction. You can take either the standard or the itemized deduction, and you still get this car loan interest deduction. It's also not an above-the-line deduction like a deductible contribution to an IRA, so that's why it does not reduce your AGI, your adjusted gross income. But it's kind of in this other spot after your adjustments, after your standard or itemized deduction. Then it's another kind of reduction of your taxable income. And so that's where it's going to sit. It has to be for a qualified passenger vehicle, and it's paid on a loan incurred after December 31, 2024. So it starts with tax year 2025, which we are in right now. Now, an applicable passenger vehicle is a vehicle whose final assembly occurred within the United States, and it has to meet the following requirements that I'll share with you. It has to have final assembly in the US. So there's going to be cars that final assembly is in Mexico or Japan or China, and those cars are not going to qualify. It is not North America. It is the United States. So final assembly has to have happened in the US. I'm pretty sure there are VIN code checkers, so you could take the vehicle identification number from the car and plug it into those VIN checkers online, and it'll tell you where the final assembly is. Otherwise, I don't know how you're going to know, because there could be cars from, say, Chevy, where the same model, it's a Chevy Silverado 1500, and this one was final assembled in America, in the US, and this one was final assembled in, I don't know, Canada or Mexico, wherever they might have a plant. And so I don't know if that's true for Chevy or for the Silverado or anything, but I know for some vehicles that is possible for the same exact model of two different vehicles to have been final assembled in two different countries. So that's something that you're going to have to be aware of. The original use has to begin with the taxpayer. So this is only available for brand new cars. You have to buy a new car from the dealer for this to qualify. It cannot be a used car. It is manufactured primarily for use on public streets, roads, and highways. Okay, that's going to be any car that you buy pretty much. So it's not like an ATV or an off-road vehicle or something. It is a vehicle that is for driving on the road. It has at least two wheels, so motorcycles would qualify in that case because it has at least two wheels. It's a car, minivan, SUV, pickup truck, or motorcycle. It's treated as a motor vehicle for purposes of Title II of the Clean Air Act. Now, I don't really know all the parameters of what that is, but all of your normal cars that you're going to buy, your regular cars are going to qualify for that. They're going to be a vehicle for purposes of that. And the gross vehicle weight rating is less than 14,000 pounds. So again, for an example, a minivan might be, 3,000 to 5,000 pounds. An SUV might be 6,000 to 8,000 pounds. The heavy duty 2,500 pickup trucks are like 8,000 to 9,500 pounds. And so whatever normal car you're buying, it's going to be under 14,000 pounds. So that is what an applicable vehicle is. When you go to deduct this car loan interest, there are some parameters there too. You have to include the VIN number. So there's going to be presumably a new tax form that we have to report this information on. There's also going to have to be information supplied to you. Like you get a W-2 from your employer that tells you how much you made and what the withholding was. You get a mortgage interest statement from the bank that tells you the property that is secured by the loan and what the interest was for the year. And so there's going to have to be some new form for this where they report to you the interest that you paid on your car loan, and the VIN number should be on there, and whoever the person is, your name and address will be on there for who owns the vehicle. So we're going to have to report the VIN, the vehicle identification number, and that's so that the IRS can make sure that it meets the weight limit requirements and the final assembly in America requirements, but that's going to have to be reported. Married filing joint you don't have to file joint to claim this. You could file separate. And from the reading of the bill and from what I've seen from other professionals too, you can each, if you file separately, now this is pretty rare. Usually if you file separately, a deduction gets cut in half. So if you file joint, it's $10,000, but if you file separately, it's $5,000 each. In this particular case, it's not. So you could file separate and each qualify for the $10,000. It's going to be pretty rare where that actually ends up benefiting you because of all the other things that kind of typically come with filing separate, but that is possible. The amount allowed as a deduction is reduced. There's limits on your income, and those start to kick in when a single individual exceeds $100,000 of modified adjusted gross income or $200,000 for a joint return. And it's reduced by $200 for each $1,000 that you go above that. But basically, it's going to be reduced. So that'd be $5,000. So I think if I did the math quickly in my head, which I should not do, you've got maybe, I think, $50,000 worth of phase out there. And so essentially, once your income goes above 100,000 single or 200,000 as a joint return, you're going to start to lose part of this ability to deduct up to 10,000. So the 10,000 is going to go down to 9,800, 9,600, 9,400 until it gets to zero. And I think if I did the math correctly, let me just check real quick. Yeah, so if I did that right, it's going to go down $200 for every 1,000 up to $10,000 of deduction, which would be $50,000 of income. So at $250,000 of modified adjusted gross income for a joint return, you will not be able to deduct any car loan interest. So if your income is above that, this is not going to be a deduction that you can get. So that's pretty much it. There is a new car loan interest deduction. Your income has to be under the $200,000 married filing joint, $100,000 filing single, and it's going to phase out over about $50,000 of income. And so if you're over 150 or 250 in those situations, you're going to lose it completely. The vehicle, there's no parameters on how much the vehicle costs. So it's not like the vehicle has to be below a certain cost. It just has to be those other criteria. It's got to be a normal vehicle for the road under 14,000 pounds, income limit and final assembly in America, and it has to be a new vehicle, not a used vehicle. Then you would be able to deduct your car loan interest. This would not entice me to go buy a new car. You're not going to save enough in taxes to justify getting a new car versus a used car and getting a loan versus paying in cash or putting a bigger down payment on it. I would not make your decision about your car purchase around the tax implications. I would essentially just take advantage of this if you happen to qualify for it. But make sure that, you're looking at your personal finances. Is this the right decision for you? Don't factor the taxes in on that. Just let that be kind of a bonus if you end up kind of checking all the boxes that qualify for this. So again, I'm going to continue to do more videos. This is, I think, the third one that I've done, but this one just kind of, like I said, covers that new car loan interest deduction. Hopefully you understand that a little bit better. Make sure to subscribe and follow along so that you get all the other updates as I continue to learn more about what's in the bill and get that information out to you. And also go back and watch those others videos that I've done already on updates that are related to this new bill that we have. Thanks for watching.